Hi all, welcome to my channel What's Going on India. So today let's discuss about something called tapering. What is this tapering? Currently this is a trending topic where Fed has announced that they are going to start tapering from December and they are going to increase the severity of tapering from the coming months. Why this is so much in focus and is there a relation between this tapering to the Indian market correction that is happening right now? I'll say yes. There is a lot of selling by foreign institutional investors, mostly from the institutional investors from USA, are selling their stake in Indian markets, and it's happening only because of this tampering event that is going to happen. Now let's understand what is this tampering and why this, actually required. So what happens is whenever there was a crisis where people's earning capabilities will get impacted, assume something like COVID. In these cases, uh, people will not get a lot of money into hands, because of which they will try to save the money, and thus further the gross domestic product of country will drop. The GDP will drop for that country. Uh, to avoid this case, once the GDP drops, that means their entire business dropped, and there will be a lot of consequences out of it, right? Based on the macroeconomics. And now to increase that GDP which is dropping, what countries will do is they will print a lot of money. Okay, with that money they will purchase assets. Assume you have some 5 million rupees in hand and you have seen a house which is of 5 million worth. So till yesterday you have 5 million. With that 5 million, what you can do? You can buy a car, you can buy a bus, you can buy a bike or cycle, or you can purchase some garments, you can purchase some television, something else. Okay, so you can purchase a number of things with the 5 million. But the moment you purchase the house which is worth 5 million, you will not have any cash left in your hand. So you have spent 5 million, but your net worth is still 5 million. You have spent 5 million, but you cannot buy anything else. So your purchasing power reduces after that. Immediately after you purchase the house, you will not have any more purchasing power. So this is what happens even from the federal banks. So they will start purchasing more and more assets, and they will release all this money. They will pump all this money into the markets, open free float markets. And then the money floats from one hand to other hand. Now since there are no hands, maybe you can say digital currency from one phone to another phone, it floats. And that's how, and also you can see in the further slides how it increases demand, and slowly it turns out a chaos at the end of the process. Along with purchasing the assets, there is something called stimulus they give to people of the country. So you might have heard US has announced stimulus. India also has announced some 20 lakh crore package, special package for COVID crisis under our finance minister. And all this money comes into markets and finally into the people's hand. Like in India also, the low below poverty line people, and medium scale people who lost jobs and all have received some 700 to 800 rupees per month during the COVID crisis. And also all the banks which has given moratorium for more than 6 months, like it is like saving a lot of money for the middle class, and a lot of things happened during the COVID crisis. So getting all this money into hands of people, what happens is the purchasing power of people increases. The increased purchasing power will actually inflate the demand. So what happens? I have a lot of money, so I don't want a second TV at my home. But since there is no EMI that I need to pay this month and next 6 months, what I'll do, I know that straight away I'm going to save some 17 lakhs or 18 lakhs, and then slowly I can pay later without even impacting my credit score. So I will go and purchase a TV, and that is like increasing artificial demand for something which is not required by that time for me, though I'm earning, right? So it's not for people who lost jobs, it's applicable for the people who are earning. I'm sure most of the people are earning. Only people who lost jobs during the crisis time were only 15 to 20%. 80% people enjoyed the benefits of this moratorium, and people collected the stimulus packages from government. And what happens? It's just an example I try to explain. The strength of business will increase. Assume you are purchasing more and more dresses. Like you like more to purchase dress, garments, and you have a lot of money. You decided not to buy anything because of crisis that is coming up and all. But later point of time, after 2 months, you realize that okay, there is a lot of money in my hand, which is sitting. So let me go and buy some new dresses. So what happens the moment you go and buy dresses? There will be a lot of things that happens behind it. One is a person who cultivates the cotton as a agricultural product, and then spinning. There will be people who will be working on this, and there will be weaving people who the ready-made industries or the hand weavers. Everybody will get some work, and then tailors who stitches the dresses, and then distributing people who actually distribute. So all these people get some work. The moment you purchase a t-shirt, this much thing happens behind it, and all these people are going to see some demand increase because people starts buying more. It's not just for a t-shirt case, it's for everything. You go and purchase a bike, the tire manufacturing companies will get some demand, and then further the rubber producing companies will get some demand. Then people who acquire the raw material steel, mining gets demand. Like that, slowly the demand increases from top to bottom and bottom to top. So slowly the demand increases, and overall the businesses will flourish. So the moment demand increases, people have more purchasing power. Businesses will see some good growth coming up. And then slowly what happens? People get a lot of money, and then there will be a lot of demand for products, and we all know the economics formula, right? So when the demand is high, the inflation also increases along with the demand. So when the inflation increases, if you see this diagram, right, where I try to illustrate. So for $2, you used to get one full card, or 2 rupees. Here it becomes 5 rupees to get the same card. Slowly, once the inflation increases, this much money is required to get this full cart of product which you are buying before. So that means your currency value is getting dropped. So either rupee or a dollar, the currency value is getting dropped, and the total amount of product you can purchase from the same currency is reducing slowly. So that's how the inflation picks up, because of the artificial demand that came up in the market. And then countries which are importing, right? So the moment you start the moment the currency value depreciates, the countries that are importing will face a lot of problems. India is a country that imports more and exports less. We import a lot of crude and gold into the country, and suddenly these countries will feel the pressure because uh, the rupee value depreciates. And when you exchange the foreign currency with the external parties, the rupee value, since it is lesser, you will have some pressure. Like previously you are paying $100, that is, assume 1 rupee is 70 rupees is a dollar, you will be paying 7,000 rupees for a product. Now when the rupee value for against dollar will become 75, that means you have to pay 7,500 rupees to import a $100 product. So the product value is $100 only, but we have to pay more amount to get the item into our country. Whereas the same is beneficiary for the exporting countries, where you get a lot of money in the exports. So China frequently reduces their currency value by printing more money and increasing inflation to because it's an export based country. They do this regularly to benefit out from the exports which they are doing. So we'll discuss about that little later. So this is how the economy collapses. So the moment the imports increases, and the cost of purchasing product increases, the rates of products will skyrocket. You might have seen the results of different companies where they all pointed that the raw product cost has been increased, because of which the net margin of the company has been reduced. You just go and see the results of Asian Paints or any chemical company or any petrochemicals where the crude oil price increased, because of which the total profit they get from selling petrol or diesel or something has been reduced. uh, so what they do to increase their profit margin, they will increase the price of their final product. You have seen in the market, uh, everything is getting increased. So if you have seen the recent updates from the telecom providers, they have increased the telecommunication charges, which per ARPU, average revenue per user, will be increasing for them. So this is a sign of inflation. Like inflation is growing up because there is a lot of money that has been pumped into the market. Now, what happens after seeing all these? The central banks comes into action to reduce the inflation. The moment inflation increases and salaries won't increase for people, right? So they feel the pressure, and then slowly the purchasing power again reduces, and uh, the economy again collapses in another direction. So what central banks will do is they will slowly take back the money. How they take back the money? They will sell their assets and collects the money back. Okay, and also they will stop buying the assets. There will be multiple assets, or maybe there can be, they open a company, they open some corporation, something. They will stop funding those corporations, they will stop funding those companies, and they will stop printing money also. They won't stop it, I'll say. They'll slowly reduce the total printing which they do compared to before. And because of this, what happens? The demand, like the demand actually reduces because people will not get that much money into hands. So demand increases, and then slowly the price drops. The price of product drops. So the inflation comes under control. And once the inflation comes into the control, the banks, right? So that means your rupee has been strengthened, the dollar has been strengthened. So that means the total value you get, like if you have $1 today or 1 rupee today, by next year the value increases, with deflation. So previously there is inflation where the value of the rupee or dollar is decreasing. Now there is deflation because of which it is increasing. Then slowly what banks will do? So anyway, we are going to get benefit out of this money which we are storing. So they will increase the interest rates and the bank FDs, or maybe RDs, which we traditionally used to do in India. These are very popular in India. So the moment the FD and RD rates increases, people will take out all their money and then they will invest into the banks as fixed deposits, and then the market slowly comes into a normalcy where it will see a pre-COVID level, uh, where the demand and supply were almost same as the pre-COVID levels, and the Reserve Bank or Federal Bank of any such that specific country will try to bring that normalcy back. That is their job, and then the fresh growth story begins. The moment the revenues increases for companies, the moment the total number of products they are selling increases, the moment the profit margin increases, slowly the growth story again begins for the companies. So that's how the cycle works. And now, as an investor, what we have to do in these type of situations is we have to look at opportunities. Okay, so people have a lot of money, so they went and purchased a lot of things. Okay, so generally if people gets a lot of money, what they purchase? think about yourself what you are going to purchase. You will purchase a lot of electronics or gold, ornaments, or some real estate. You purchase some land or a flat or a something. So because of which what industries will get benefited out, or you may purchase vehicle also, because of which what industries will get benefit. The steel industry will get benefit, the manufacturing industry will get benefit, and then so and so industry will get benefit. But irrespective of whether there is lot of money or there is no money, there will be one industry or two industry or three industries that are going to survive. So one is, see, during this time, banks have given moratoriums, banks have given a lot of things, and then they have some pressure. Now slowly banks will start getting the FTs. So the banking sector will revive after a crisis. And the same may happen even for health and pharma sector, where people feel like we cannot take medicine based on our financial status, right? If we are feeling headache, we have to take a painkiller. So there is no other option. So these sectors may still continue to outperform even after crisis. And these are some examples you can think out of your own knowledge. And also the moment the product price reduces, and the sales increases, there will be companies like see, India imports a lot, right? So the import product cost will reduce after the tapering. So what are the major imports for India? It's crude oil, and some companies will sell final products based on crude oil. Those companies are going to get benefit out of these things, these activities. And these companies were the worst affected during the same time when the markets are getting stimulus due to the raw product price increase. So these are some type of things which as an investor we have to look at, we have to think through, and then we should invest according to the situation of the current markets. I hope you understood my video, and if you like it, please like it, share and subscribe so that it will reach more and more audience. Thank you.